Welcome back to my channel, Absolute Trade King. Today is June 10th. It's a Friday, and I'm usually very cautious on Fridays and won't engage the entire capital, trading capital. So I've entered into a low range triangle, which requires capital around 2.5, roughly 50% of my capital I've deployed since it's a Friday. So I've entered the position here in the second 5 minute candle at around 9:20 a.m. and you can see Nifty opened gap down of good 1%, and currently Nifty seems to be overstretched on the downside. You can see even the RSI is very much overstretched. It's currently at 23 or 24. So I am expecting Nifty to reach the support zone here, to fall till here and give a bounce back from this position. Currently, if you see my positions, it is in profit of 720 rupees, and I've deployed 2.5 lakh capital. I've sold two lots of calls and puts respectively. And if you look at the chart, the dotted lines here are the 1% range from where I have entered. So this is 1% downwards and 1% upwards. So if the Nifty is between this range, I can expect to make some profit. Once it crosses here, I'll look if it is feasible for me to exit the trade with a small loss. So I'll keep you guys posted as to how the trade goes. Thank you. Time is around 2 p.m. and my positions are currently at break even. The straddle loss currently stands at a minor loss of around 300 rupees. And also, I had entered into a quick scalp trade with one lot of 16,000 PE. So I had entered into the position here at this candle when I saw that Nifty was at a good support zone here, and also there was a bullish candle, a hammer candle that was seen. So I quickly sold one lot of 16,000 PE at nearly 70 premium and exited once I saw a reversal from this 20 EMA. Roughly made around 300 rupees for one lot, a decent profit for far OTM where the premiums are relatively low, and today is a Friday. This was a quick trade though. Today has been completely one-sided momentum from Nifty, if you see. So Nifty opened with good gap down of nearly 1%, and it's been continuously going down. And my positions are at almost a break even, if you see here, and I'll be holding the positions till 3:15 p.m. or till the loss of the straddle extends to minus 1,500. My stop loss is currently at minus 1,500 rupees. So if either it's 1,500 or at 3:15, I'll exit the trade. I'll keep you guys posted as to how the trade ended. Time is around 4 p.m. Right now, and I've exited my strangle at 3 p.m. itself. I have made a minor profit of around 360 rupees. You can see here. If you look at the chart, right? So Nifty has been completely one-sided. It opened gap down of 1%, and completely it has moved in the negative direction itself. But at around I think around 230 something, there was a sharp upward movement of around 50 points, which actually moved our profit from negative to positive minorly. Uh, and I exited from the straddle at this candle when I saw this huge candle build up. I immediately exited with a minor profit of 360 rupees, and also I had sold quick. I had entered into a quick scalping trade, which where I made 310 rupees. So total profit today stands at 670 rupees. The advantage today, right? I had sold a low range strangle today, so the range was just 100-point difference in the strike price that I had sold between PE and CE. The advantage of selling as a low range strangle or even a straddle, uh, over the far OTM strangle is that the premiums will be really very high, and any movement in the market, for example, 1% downwards or upward movements, right? The premiums will be enough to actually compensate the loss that is seen in the other leg. So it usually will end up with a minor loss or some profit if we use a straddle or low range strangle. So usually the mistake what newcomers do in trading is that they think it's safer to sell far OTM strangle. Uh, but the thing is that it is completely opposite in intraday. So if you sell a far OTM strangle, if there is a one-sided movement, the other leg will not fall enough to compensate the rise in the leg which is increasing. So, for example, suppose we are selling OTM put at 50 and OTM call at 50 premium. Uh, Now, if the market moves sharply in one side, the call premium might become 100, but the put premium will not reduce to zero, right? So it might be 25 or maybe 20 premium. And so we'll see a loss of maybe 20, 25 points. So this will not be that much huge of a difference when you sell a straddle or a low range strangle, because the premiums are high enough to compensate any change in the other leg, and we end up making lesser loss, or maybe even a small profit can be expected. So that is the reason I usually prefer selling straddles or low range strangles in intraday. Yeah, so I hope this was of some use or some learning for you guys. I'll see you on Monday. That's all I have for today. Please like and share the video, and also subscribe to my channel for more such option selling intraday videos.